Good morning, everyone, and welcome to the PivotBoss pre-market video for Tuesday, April 27th, 2021. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. You'll notice another narrow trading range heading into the RTH Open today. We are at 38% of average range, trading 16 and a quarter points of range. Tiny little range here. Back-to-back tiny ranges. This one finished as a tiny range. This 2-day narrow range holding right at the highs or at the top here of the narrow multi-day range here. From a 10-day perspective, it's still compressed, but we can push this up to 10, 12, even 13 days with today's action here, and it's still a compression here that is developing. At some point, that compression will lead to the expansion here, compression to expansion, compression to expansion. And at the very least, we're looking at about 216 points of range expansion. At times, you'll go perhaps beyond that, 250 points. It seems to be about right as well on how far this thing can go. So we're looking at 200 plus points of price range once we get some movement here. We do have the Fed interest rate decision this Wednesday, in addition to the Fed statement, the FOMC statement. That's going to give us another FOMC key level, similar to the one we got here in January and also in March. We'll get another one of those that'll give us another key level to watch later on. So we may see a bit of compression heading into that statement, but after that statement, we may see an increase of volatility that could look similar to something like this or this. Where we get some big movement here that could lead to some nice price action. All right, let's take a look here at the NQ. Over here, you can see that price continues to trade right on the key range high. We have this trading range from here to here. Down here, it's reflected again, 45% of average range, major compression. We're looking at least 1,000 points of movement here once we get a move away from this level. Is it going to be 14 to 15K? Do we get a breakdown and maybe a bounce off 500, 13.5 to 14.5 could be a play. So we'll see how much movement we get here in which direction. But everything continues to flow to the upside. We had that major upside break here with the strong move. The idea is that overall we're going to continue to trend higher toward 15K as long as price can continue to hold market structure along the way. And so far that's been the case. So again, very narrow range at these highs. Just 20% of average range right now heading into the RTH Open. 42 points of range. It's been averaging over 200 on a 5 and 10 day split. So very, very narrow price action. Again, we may see further range-based activity here heading into Wednesday's FOMC statement and rate decision. We also may see further trading range action a little bit here within this larger range before we're ready to break out. Usually the Thursday after the Wednesday statement is usually the high range day, but that can trigger an additional week to 3 weeks of volatility. All right, let's take a look here at crude oil. You'll see with crude right now, this one is up about 0.9%. What we mentioned here yesterday morning and also yesterday afternoon in the trading room is this developing failed low right here developed throughout the day. We were able to close right around 62s. That was bullish. I mentioned that there could be a 1-day rally at the very least here where we push higher toward 63, 63.40. And any pullback, even a pullback as deep as the previous session's midpoint, could offer an opportunity for a continuation higher. So that was the initial idea. We have a lower low failure here, great rejection here, failed new low and a continuation. We're looking for a bounce back up towards 63.40, but overall we could see another pullback here this morning. Any pullback into 62s or a new low for the day could provide an opportunity to get things going to the upside. But for the most part, again, this market has been range bound in various narrow ranges this entire time here and hasn't really seen a lot of directional conviction. So keep that in mind. Any failure to hold 62 for an extended period of time could open up a return back toward the bottom of this multi-day range. All right, let's take a look now at gold futures. Now gold here continues to do everything it has to do in order to go higher. It first got a rejection of the previous low. It pushed to a new pivot high. A higher low developed here with a strong bullish outside day at one point. A continuation to new highs here and back above the 1765 level, which is a key support level. And now it's been holding above that zone. I mentioned yesterday if we can just get a higher low to develop. We were right at the previous session's low yesterday. That became the rejection point. If we can just develop another higher low here, similar to this one, we could be looking at a continuation toward 1820 to 25, followed by what could be a completion of this move toward 1875 down the way. So right now, from a medium-term perspective, we're seeing nice strength to the upside, especially if price can continue to hold 1765. We could dip as deep as 1750 and bounce, but overall 1765 is the level to watch. That once should it drop back below it, it needs to reject it fairly quickly. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.